Welcome to Stock Talk with Nico Kritikos. Today we're going to take a look at Ulta Beauty stock, and we're going to find out if this stock is currently a good opportunity to invest in them. And first thing I looked at for this company was their latest investor presentation, and I learned a few things here. The first one being is that Ulta Beauty is the United States' largest beauty retailer. So they have like hundreds, so they have 25,000 products here from over 600 brands. And it looks like in the last 5 to 10 years, they've been pretty successful with switching over to e-commerce sales and kind of transitioning the business to selling online. So that's great. That's definitely a good sign, because a lot of other big brands from the previous decade, that was one of their major downfalls, was not being successful in switching to e-commerce. So Ulta Beauty is doing good with that. If we look at the stock chart, I did buy 2 shares last week. Not that I think this is a great deal right now. Or, I mean, looking at the stock chart, it's at a 52-week high. So it's up 40% on the year. So it doesn't look like a great buying opportunity, but at the same time, sometimes really strong companies will just continue to run for, a couple of years. So maybe this is that case. More likely than not, though, the stock's going to come back down, and we're probably going to see $450 again. And that's when I'll buy a couple more shares. So if we look at their revenue, we're going to find they average 17% revenue growth over the last 10 years. So that's very strong. If we look at net income, we're going to find they average 23% growth for net income, which is huge. That's a big number. So both of these top 2 things on our checklist are going to get a check. As for the price to earnings, it's trading at 28 times trailing earnings, and now about 23 times forward earnings. Even though if we look at the top here, it says 19 times forward earnings. So I'm not sure if they're looking out to 2025 or what that is, or 2024, I don't know. But for this upcoming 12 months, it's about 23 times earnings, which might not sound like super cheap, but if we look at where this company normally trades, we're going to see that it goes all the way up to, 35, 40 times earnings at points. Look, this is at 46 times earnings. So in the past, we see this company trading at normally 25 to 45 times earnings. And in 2019, it came down to 19. And in the last couple of years, it's been around to an 18. But it looks like 18, 19 is the lowest you're going to get it. So if we're talking paying 22 times earnings, 23 times earnings, that's not that bad. That's what makes me think there is a possibility the stock continues to run for the rest of the year. That is a possibility. Then if we get into, are they innovative? I would say yes. They're keeping up with e-commerce. They're partnering with tons of famous brands and famous celebrities. And their moat is that they're the largest beauty retailer. So I think they got enough going for them there. Number 5, the industry's growing. Makeup is expected to grow 4%, or beauty products 4% per year. And the entire industry is supposed to be worth $250 billion. Now, this company just did, how much? What did they just do in revenue? They did $6 or $8 billion. So there's plenty of room for this to run. This could, they could do double or triple the amount of revenue they're doing now. That's very possible. I think there's plenty of years of growth available for this company to take advantage of. Return on invested capital is one of the strong suits here. If we come down, we're going to see last year they did 40%, which looks like an all-time high, which is amazing. I don't know that many companies that have 40% ROI numbers. 2021, they came down to 6, which is kind of weak, but that was just a one-year thing. You can see they have no problem putting up 30+% ROI numbers. So that's fantastic. That'll get a check. That is a very good sign. I think that's one of the most important things to look for. Increasing free cash flow. If we go to that metric, what we're going to see here is they've done a great job growing free cash flow on average 25% per year, which is amazing. Diverse revenue streams. This one you could debate. You can say that no, they just have actually they do have different products. They do have different services. They also offer services in their locations as well. So it's not just about selling makeup products, but they also have so many different locations. They have so many different types of products. And unless you think that people are going to stop buying makeup sometime soon, then that's the only thing you really have to be worried about. So next up, we have equity. If we look at equity, we're going to see equity did decrease for a couple of years, went from 1.5 to like 2 billion and then it came back down, but now we're back up to close to 2 billion. So they're keeping up with that. Is it over 15%? No, unfortunately, at a $27 billion valuation, you would need about $4 billion of equity, which they don't have. That's one of the downsides of buying a stock that trades at a richer valuation. When you're paying 25 times earnings, normally the price to book is going to be a little bit more expensive. So you got to keep that in mind. But that's just, one of the risks you have to take with this. If we look at the share count, we are going to see here that it decreases on average 1%. So definitely good enough. Assets are not 2 times liabilities, and they're close, but not, they're not that, the balance sheet could be stronger. So that'll get a nil. Profit margin of over 10%. If we look at that, we are going to find that profit margin was 11% in the last year, and then normally it's right around 10%. So that will get a check. Cash more than average income, unfortunately not. Healthy dividend, no, unfortunately not. And then is it over 20 years old? Yes. So all in all, we have how many no's? 1, 2, 3, 4. So this gets a 12 out of 16. So it is considered a buy. So I'm pretty bullish on this. How I said, oh, it's falling pretty quick right now. But let's see, are they reporting earnings? Yeah, they're reporting earnings right now. That's why. Let's see. Yeah, so here we go. This is a live earnings call. Let's look up Ulta Beauty EPS. It's probably not out yet, but let's see. Now, what might happen right now is a stock like this that's at a 52-week high, if they don't come in with fantastic, not only earnings, but really guidance, if they don't have great guidance for this year, this stock's going to fall. This stock's going to fall 10%. If there it goes, it's already falling. So this thing will fall 10% at least if they don't have good guidance. So let's see, we're going to see what happens here, but let's see. But yeah, they're going to have high expectations. So we'll see what happens with that. How I said, if it falls and it comes to 450 or 400, I'm going to be excited to buy up shares. Because even if they say they're expecting slow, let's say they lower their guidance and they're expecting slower earnings for this year, that doesn't mean anything. That has no fundamental impact on the long-term success of this business. So I'll be ready to scoop up some shares as soon as this thing comes down to 450. There, it keeps falling. As soon as this comes down to 450, 400, I'm going to be buying some shares. And if you want to buy right now at the 500 to 520 range, you could do that, but just be expecting it to fall. And yeah, thank you for watching, and let's hope this stock keeps falling so I can buy some more shares. I will see you guys in the next video.